Welcome, ladies and gentlemen, to Commodity TV in a new edition of our online interview series. We want to get an update from Revival Gold, and Hugh Agro, the CEO, is here with us because that company had fantastic news we want to talk about in a second. And also, I want to say upfront, I'm a shareholder in the company, of course. Hugh, welcome and good morning. How are you?
Good morning to you. It's wonderful to be with you, Jochen, on this day.
Perfect. Yeah, well, you guys had really good news, I would say. To my understanding, really fantastic. You just delivered for Mercur a PEA. So you must be really happy.
Oh, we're thrilled. Remember, we acquired the Mercur Gold Project in Utah just a little less than a year ago, and our main objective there was to increase the scale of our business in open pit heap leach gold and move more quickly towards free cash flow and a faster permitting timeline. And this PEA underscores the success of that move, gives us a ton of confidence going forward here. $294 million of NAV, 100-ish thousand ounces a year of gold production. This project is a 2-year permitting timeline. Tick, tick, tick on the boxes for what we had hoped to achieve with this project.
Yeah, absolutely. Yeah, and it's a 10-year mine life. That's also fantastic for a start of a mine, of course. And I must say, you calculated that quite conservatively at $2,175 gold. I mean, today it looks conservative, but I could imagine at $3,000 gold, that's a much different project, right?
Yeah, listen, we're talking about in total in Revival Gold at $3,000 gold, $1.2 billion of NAV, $1.2 billion of NAV at $3,000 gold. It's about $500 million of NAV at 2175 gold. But we're 50% higher than that right now. And none of that is reflected in our stock price, currently trading today at zero point 0.1 times NAV on that $2,175 gold calculation.
Okay, super. And I saw also the pre-production working capital is only $208 million. That is not really much for such a project.
Yeah,
What reasons for that?
Yeah, you'll recall, Jochen, it's all in the name, Revival Gold. We're about reviving brownfield sites with existing infrastructure. At Mercur, we've got a grid power to site. We've got paved road to site. We've got offices. We've got water. We're an hour from the city of Salt Lake, so no requirement for a camp. That $208 million of capital includes contingency. It includes working capital. It includes our lease prepays. So it's an all-in and encompassing capital number. It actually works out to just over $200 an ounce of gold production, and that puts us at the very low end of any of our peers developing gold projects in the United States.
Okay, super. So you said it's a 2-year developing time frame. What does that mean now in the terms of pre-feasibility, feasibility? What are your next immediate steps? And could that be, let's say, well, maybe in the next 3, 4 years already in production?
Yeah, so 2-year permitting timeline, but we can of course do things while we're advancing the permitting, right? We've got to move through a PFS, as you've pointed out. We will want to do an FS. We have on deck coming out of this PEA a lot more drilling that we want to do. There's a tremendous potential in this deposit. It is a 6,600-hectare land position. It's a Carlin type system. These are the very valuable deposits in Nevada that are delivering so much gold production today for bigger companies, and they are very constructive, very productive types of deposits. So lots of opportunities for us to add to the resource and build on the value here while we're pursuing the permitting exercise. And our team is really itching to get going. We'll have more details and specificity around what are the next steps as we get out and tell this story and talk to our investors and pursue our agenda to get more eyeballs on the story. It's a very exciting situation to be in. We're in a very constructive gold price environment, and even if gold drops here, takes a bit of a pause, as you know, I would not be unexpected to see. We're still at levels way above anything that we've conservatively estimated our cash flow potential and net asset value at. So lots of potential here, and we want to get out and tell that story.
Okay, super. There was also an executive order, I think that was last week with Donald Trump, where he said, "Hey, gold is also something we want to help on to have the mining in the US." Do you have any specific data for us already? How would you benefit of that? Would that mean that maybe there is not 2 years permitting timeline? Maybe it's faster?
So specifically for our project in Utah, Mercur, we're in a state process because it's private claims. We don't depend or intersect very much at all with the federal government. And so I don't think those executive orders really mean a lot to us immediately in terms of what we're doing at Mercur. We're already in a very good situation there. More broadly speaking, I think any effort to improve, streamline on permitting in the United States is a good thing. It's a good thing for everybody because it is a cumbersome process. It's a good thing for our Beartrack-Arnett project in Idaho, where we are on federal land. We'll pursue some actions with the state government around that in due course. But look, we don't want to have to depend on any changes in policy. What we've instead decided to do is put ourselves on a private land position, and the again focus on these projects that are in places where gold has been successfully mined before, and where communities are in support of bringing economic activity in a responsible manner to their back door.
Okay, super. I saw also that your AISC at around $1,360. I mean, that looks to me still very low because if I look at the world average today, we are already approaching $1,700 now as a world average. So how did you come on that those low AISC? And do you think you can keep that over the course of then feasibility study, etc.?
Yeah, the numbers are current, so they're hot off the press. Our consultants, Capus Cassidy and Respec, are very well regarded engineering firms in the U.S. They understand these heap leach projects. We feel very confident with the numbers we've got here. The low all-in sustaining cost is a function of the fact that we don't have a lot of pre-strip to do or post-strip or road work or new plants to put in during the life of the project. It's a very straightforward build and operate. We're only talking about pits going to about 150 meters depth. And it's all in a very good location in terms of operations. As I pointed out earlier, we've got all this infrastructure already in place. We are on paved road. We don't need a camp. So those things all impact cost. The other thing I'd point out is that this project is, at zero point 0.6 grams per ton gold for a heap leach, is almost twice the grade of many of our peers and the operating mines in the United States. So we're going to stand out ahead of all of those groups anyway. And if we look at just our peers operating gold mines in the U.S. at heap leach open pit, we're looking at average AISCs still a couple $100 above where we're at today. So we're very competitive on a capital point of view and on a AISC point of view, and that makes the project uniquely positioned. And especially given the short timeline to get to free cash flow through permitting and next steps.
Okay, super. And this is gold straightforward, right? There are no other byproducts.
Yeah, thank you for making that point, Jochen. It is 100% gold. So if you're looking for gold leverage, we're trading right now at $8 an ounce in the ground. Think about that. Price of gold is over 300 times that level, 350 times that level. So lots of exposure to gold, and it is to your point, pure gold. It's not gold equivalent with copper or silver. It is pure gold. And not only do we offer leverage from a point of view of the current ounces that have already been discovered, we offer leverage in terms of real option value. And this is another thing about these development projects in good geographic locations. There is more gold to be found. These deposits will continue to grow, and they will continue to provide benefit to shareholders who own our shares.
Yeah, but I could imagine that you want to go high speed towards production because at those gold prices, you really want to start production, but you can also explore later, right?
Correct.
Yeah, super. You have also Beartrack-Arnett in addition. So is that a little bit, yeah, let's say, I wouldn't say pushed on the side, but maybe the focus now is really on Mercur, or are you doing also some work on Beartrack?
Well, the portfolio is actually nicely positioned because we've got Mercur at the front of the queue, faster timeline to permit, still a relatively low capital. We've talked about $208 million, and so that will be our focus. But we continue to have a ton of exploration upside at Beartrack-Arnett, and while we progress permitting preparations on that project, I think we'd like to do some more drilling there. Remember, we've got mineralization already over 5 kilometers of trend. We've got another 5 kilometers of open trend beneath that. We spent last year developing the business case to continue to drill there with soil geochem and with geophysics and structural modeling. We restructured our underlying agreement around part of the claim position there, making it a smooth sailing ahead with respect to property costs. And so we like the opportunity to continue to grow that deposit, but it will be dependent on being able to do that with minimal dilution to our existing shareholders. We want to choose our places and our time carefully to optimize value.
Yeah, makes absolutely sense. Super optimized value. I think you have showed that now with that PEA already. And I think all the numbers really speak for itself. So I would say speed it up, make it happen, and build that mine.
Thank you, Jochen. Yeah, listen, 6 million ounces in the ground, trading at zero point 0.1 times NAV, $8 an ounce in the ground. This is a stock that's worth 3 or 4 times just even based on what we've done already. And I think there's a lot more upside to come.
Definitely, I see it the same way. Super. Hugh, thank you very much for your time. That looks really compelling. And I have a good feeling that we talk very soon.
Okay, thank you, Jochen.
Super, thank you. Yeah, ladies and gentlemen, that was Hugh Agro with an update on the PEA for the Mercur project. And I think when you read those numbers, that really speaks for itself. And I must say, the revival stock between 35 and 40 cents, this is a bargain. That's why I'm a shareholder. Because I get gold in the ground really, really cheap, as Hugh alluded to, $8 the ounce. I think that's really a good thing and a good value to have in your portfolio. So really make sure you have a look at Revival Gold and really get some shares. Thanks for watching us, and bye-bye from Switzerland.